Hello, Howard Deal here from the General Agency, and today I will be talking to you about level-funded, self-funded plans for small group. I have run a small group quote for one of our customers. The quote has a September 1st, 2016 effective date, and it's this quote I'll be using to demonstrate how a self-funded plan works. For those of you who are on a fully insured policy, your premium payments are really very simple. Every month you take your checkbook out and you send a check to the insurance company, and in return they pay your claims. Now, whether you've had good claims experience or bad claims experience for that year, you just have the one premium payment that you pay, and the insurance company pays your claims. On a self-funded policy, the same thing occurs. You still have the one check, you write to the insurance company, you send it to them. The difference is the transparency. The insurance company, when you send your check in, they'll actually take a portion of your premium payment and deposit that into what is known as an employer-owned trust account. That right there is also known as your aggregate deductible. As you can see on this proposal, it's broken up into three separate line items. Line A is the fixed cost. The fixed cost is the cost of the insurance itself, administrative costs, and so on. Line B is your aggregate deductible, otherwise known as the maximum aggregate deductible. Line C is the combination of your fixed cost and your aggregate deductible combined. So this employer has 70 employees, and the employee-only rate showing here is $285. The employee and spouse rate is $608. The employee children rate is $580. And the employee family rate is $858. Now, the employee cost is actually combined into the employee, spouse, child, and family rate. So to get the true cost of the dependents, you'd have to subtract out the $285. So let's talk about line B. Line B is the maximum aggregate deductible. As you can see, the subtotal of line B is $20,970 a month. If you multiply that times 12, you get $251,640. Now, out of that $251,640, that is what is there to pay claims. Okay, so if this employer has claims that are less than $251,640 a year, whatever's left in that employer-owned trust account, he can either roll over to next year or get it back in a refund. Now, if the claims exceed the $251,000, that's where the insurance kicks in, and the insurance company will pick up the claims above that amount. So that makes this plan a level funded plan. Okay, so now let's talk about specific and aggregate deductibles and how they work together. The aggregate deductible on this plan, as we talked about, is $251,640. Now, a specific deductible covers a specific claim. So, for example, if I'm on the plan and I have a car accident, my claims are $500,000 or $500,000. My $500,000 claim will not wipe out the aggregate deductible because of the specific. With the specific deductible, only $35,000 will come out of the $251,000. The specific deductible actually protects that aggregate deductible from large claims. For more information on this plan, please contact your agent or visit the General Agency at www.thegeneralagency.com. And remember, all plans vary. Be sure and read your contract, and remember that some rates, conditions, and exclusions apply.